Welcome to the Sales Tax and Payments webinar. My name is Whitney, and I'm going to be your instructor today. And I just want to go through what we're going to learn. So we'll start off with talking about how to set up sales tax, how to turn it on, how to get it started. Then we will set up customers, set up products. We'll talk about turning on shipping. We're going to run a couple reports, including a brand new sales tax report. And then finally, we will actually record a payment. All right, and let me switch over now to actually looking at QuickBooks. And before I get into the Sales Tax Center, one more thing I want to show you is if my screen is looking a little different from yours, my QuickBooks Online, if you go up to the gear, I'm currently in the accountant view. You may be in the business view. So if yours looks a little different, that is why. And you can switch if you would like to. All right. So if you sell any products and services, QuickBooks can help you track sales tax. With just a few steps, you can calculate sales tax on your taxable or exempt products or services based on individual, state, and local laws. And you'll know what you need to pay when you file state and local taxes, because automated sales tax is just that smart. The one consistent thing that we have learned about sales tax is that it is never consistent. Sales tax rates are always changing, along with what's taxable and what's not. And this is where automated sales tax calculations in QuickBooks Online can be extremely helpful. Intuit actually has a team of real people, not robots, real people, behind all of their sales tax rates and taxability content. And they actually track down updates on a daily basis for you. So if a sales tax rate increases, they know about it. And the rate is automatically updated for you, so you don't have to think about it. If there's a sales tax holiday in your state, once you've mapped your products to tax categories, you don't have to think about it. QuickBooks Online can automatically handle all of these pain points for you. Basically, no thinking involved. And I can hear sighs of relief, even though you're all muted. Now that we've talked a little bit about how sales tax works, let's walk through how to set it up. All right, and I'm going to go to taxes down here on the left, and then sales tax. And I'm going to quickly walk through enabling automated sales tax for the first time user. But if you've already enabled automated sales tax, you're going to actually see the sales tax center when you go here, when you click on taxes. And we will go there in just a minute. So if you've already done the following steps, just hold on for a bit. What I'm going to do is I'm going to select use automated sales tax for automatic sales tax. I'm sorry. And the first thing that's going to happen is you're going to be prompted to confirm your business address. And this will pre-populate if you've entered it in your settings, but you'll have the option to edit it here in the sales tax setup if you need to, just by clicking the little pencil here. And it's really important that you use a correct and complete physical address for your business. We actually encourage you to use the full zip+4 address to ensure accuracy. So you might have to look that up. Once you're sure, though, that the address is correct, you can go ahead and click Next. And next, where you do business is important for sales tax calculation. So you're going to be asked if you need to collect sales tax in any other state. And for me, do you need to collect sales tax outside of California? If you do not, you can just click No. Very easy. If you do, you can say yes. And what you will do is add all the states where you do collect sales tax. For us, we are just going to go ahead and select No, and then I'm going to go ahead and click Next. And look, we're getting ready to cut. Oh, I couldn't even read it before it was done. I told you it's fast. So the next screen here shows that sales tax is all set up, and I have a button that I can use to create an invoice. I'm not going to click on the Create Invoice right now. What I'm going to do is I'm going to exit out of the screen. And you're going to be prompted to actually select a filing frequency. And the reason QuickBooks prompts us to select a filing frequency is so that the sales tax center, which I swear we will be in just a minute, can show you what's due in each state for each filing period. And every state is going to have different requirements for how often sales tax payments are made, and having that correct filing frequency is actually going to help QuickBooks get it right. For example, in California, and you can see this information down here, that's the state that I'm filing in. the frequency for filing taxes depends on the average amount of sales tax that's collected on a yearly or a monthly basis. But you might have different state or local laws, meaning you should always follow the information on your business's sales tax permit. So you can refer to that. What I'm going to do here is I'm going to select monthly, because that is the filing frequency that the California Department of Tax and Fee Administration's office, bit of a tongue twister there, assigned to me. I also want to show you that the start date is going to automatically default to January. You can see that right here. That might not be correct for your business. However, you can update the date in the Sales Tax Center, which we're going to go to right now when I hit save. I told you we'd be here. So this is the Sales Tax Center. And what the Sales Tax Center does is tells you how much you've collected through QuickBooks Online and how much is due to each agency at the end of the period. And once you have sales tax set up in your QuickBooks account, like we've just did, invoices will automatically apply sales tax for those tax agencies that you have enabled or turned on in your QuickBooks account. And you can see what tax agencies that you actually have set up. They're coming up here to the top right, and we're going to click sales tax settings. And so I can see them right here. I have California. If you don't see the sales tax agency that you need, what you can do is come right up here to the top right and select add agency. And then what you'll have to do is enter the state, the tax filing frequency, and also the tax license effective date. And you should get all of this in writing from your state after you register for sales tax. As a side note, there are 5 states that don't currently impose a state level sales tax. And they're often referred to as the NOMAD, N-O-M-A-D states. And that's our mnemonic to remember them. So there are New Hampshire, Oregon, Montana, Alaska, and Delaware. And so you're all scrambling to move there. QuickBooks will, though, still let you add these state tax agencies, even though there is no state level sales tax. And the reason why is to help you comply with any other tax collection obligations that might not be currently supported in the automated sales tax feature. So for things such as lodging or restaurant meal sales. Once you add those agencies, you can actually create a custom rate under the NOMAD agencies for those other areas of tax. So not only are there the NOMAD agencies, there's also some self-administered locals. And for some states, you may need to add a local tax agency in addition to the state agency. And there's a number of states that apply sales tax at the local level. For most states, the state is going to handle both the state and the local tax administration, meaning that when you enable the state tax agency, the local tax will be calculated on the invoice automatically, because you don't have to do anything. However, there are some other states where local taxes are managed directly by a local tax agency or even by a third party that's designated by the local. If you're in one of those jurisdictions, you will need to actually add the local tax agency in addition to the state agency. And you have to add that local agency so that the local tax will apply on the invoice. And I'm going to give you an example here. So if you are doing business in Golden, Colorado, I'm in California, Golden, Colorado, shout out to everyone from Golden, Colorado who's here. You're going to have to first add the state of Colorado as an agency, and then add Golden City as a separate agency. And if you don't see your local agency in this list, don't worry. If it's one of the state administered locals, you actually don't have to do anything. Intuit will take care of it for you. All right, so let's go ahead and X out of here, close out of here. And now that we've got sales tax set up and turned on, let's talk about how to set up customers. Because having the right customer detail in your QuickBooks account is going to help ensure that the right sales tax applies on the customer invoices. And for this, I'm actually going to go to our customer center here. So completing the customer detail here with your customers is going to save you time on your invoice, because all of the information will be pre-populated when you create an invoice for that customer. And I'm going to go through 2 examples here. I'm going to start with Amy's Bird Sanctuary. And I'm going to edit her information. And I'm going to go to the tax info tab. And so Amy's Bird Sanctuary is actually an example of a taxable customer. And you can see I do have a checkbox here if they were tax exempt. She's not exempt, so I'm not going to check that here. And what I can do is I can select a tax rate for our customer. The default setting for all new customers is going to be based on location. And what based on location does is it means that the standard sales tax rate is going to automatically default to the ship to address on the invoice for California. If you do need to attach a custom rate, you can still do that. What you would do is you would see if you set up a custom rate, you would actually see that option here and you would just select it. But we're going to go with based on location because, and this is an advantage, by using the based on location feature, QuickBooks is going to track any changes to the rate automatically. So going back to what I kept saying, you never have to think about it. We all love that. So the thing with based on location is that you do want to make sure that the complete shipping address is included on the account because that's how the sales tax rates are calculated. And I'm going to go to the address tab to show you this. What this means is that the more accurate you can get this address, the better off you are. And USPS verified addresses are going to get you the most accurate calculation. And again, including that +4 zip is ideal. So if you can include that, include that. What you can also do in this tab is you can set your customer's billing address to equal the shipping address by checking this little checkbox here. And then what we're going to do is we are going to save. So I'm going to go back to my customers and let's use Alamo Foundation as an example of a tax exempt customer. So I'm going to click on Alamo and edit, and we're going to follow the same steps as we did for Amy's Bird Sanctuary. So I'm going to click on tax info, but this time I'm going to check that this customer is tax exempt box. And you can see that it already looks different because your customers always have to have a documented reason for being exempt, and QuickBooks wants to help you track that. This documentation is usually going to be an exemption certificate from the state, and it will detail what the customer is exempt from. And if I click here, you can see all the different reasons. For example, if I chose federal government from this list, and then I created a sale to a federal agency in Arizona using this customer, only 50% of the sale would be subject to tax automatically. But for this example, what we're going to do is we're going to select resale and then enter in our customer's tax exempt ID number right here. 8675309. They're so lucky for their tax exemption, aren't they? All right, and there's also one other thing I want to show you here, which is the attachments tab. And the attachments tab is a great place to store a copy of your customer's tax exempt certificate because you are required to keep those for every sale, just in case you have an audit and you need to produce them. And we'll go ahead and we'll cancel. And that is how you would set up customers. So now that we've set up customers, we're going to move on to the next part of sales tax, which is actually setting up the products and services. And for this, I'm just going to change tabs right here, and I'm going to go to products and services. Because an accurate sales tax calculation doesn't just depend on your business or your customer's location. It also depends on what you're selling. So some items are going to be deemed taxable, whether at a full or a reduced rate, and others exempt. And those decisions on what to tax are ultimately left up to the state. And no two states are exactly the same. So again, I know I've said this a few times, it all depends on your state. In the automated sales tax feature in QuickBooks, you're actually able to match up or map the products and services that you sell to a list of tax categories inside of QuickBooks. And the taxability of those tax categories have actually been researched thoroughly by Intuit's in-house team of sales tax experts. And those categories will contain all of the correct taxability and exemption determinations, any applicable thresholds, or any special rules that may apply across the United States. Meaning that once you map your items, you will be able to run transactions anywhere, anytime, try it anywhere, anytime. The best part is that once you map your items, Intuit sales tax experts are going to keep the rules and the rates updated for you anytime the state or local tax authorities make changes. And I know all the people coming from desktop to online really love that. So let's actually look at an example. And let's say that we repair birdhouses for Amy's bird sanctuary, and we call this charge labor repair. So I'm going to go ahead and I'm going to set up and I'm going to map this service to a tax category. So I'm going to choose new, and it's going to be a service. And I'm going to call this labor repair. And I could then fill in a SKU, description, sales price, rate, but this is the sales tax webinar. So what we're interested in is this sales tax section. So I'm going to click edit sales tax. And what I can do from here is I can search through the drop-down menu. So I can see all the different for each topic, or I can utilize the built-in search functionality. And I'm going to go ahead and do that. So I'm going to type in labor, and you can see I have 11 suggested categories. And thankfully, it's always nice when this happens. The first entry actually looks perfect. So I'm going to select labor charges only. If you're searching for your item here and you don't see the tax category that you're looking for, what you can do is scroll, and I'm scrolling all the way down here, and you can click still don't see what you're looking for. And then what you can do is you can choose taxable standard rate if you want your item or service to be taxed, or you can choose non-taxable if it should be exempt. And just a helpful tip, and I'm going to click done here, and I'm going to save and close, because I just want to show you this as I go through the helpful tip, is to make sure your entry is correctly classified and added as a non-inventory, inventory, or service item, because tax rules, meaning what address is used for calculation, may differ from state to state, depending on if the sale is of a good, such as an inventory, or if it's of a service. So you want to make sure that you get this right. All right. But once you map your item to a sales tax category, if the taxability of the item changes in any state, QuickBooks Online will update that information on their end automatically, so you are compliant. And that way, you don't have to worry about tracking state legislation for taxability changes. So you can get that out of your bookmarks. You don't have to do it anymore. Intuit does it for you. So that is how you can set up products and services. Next, let's talk about how you can turn on shipping and how that is related to sales tax. And if you are shipping items to customers, you have to tell QuickBooks that. Unfortunately, it can't read your mind yet. It's coming. And if you didn't set up shipping in your setup flow, you can turn it on by coming up here to the top right and clicking on the gear icon. And I'm going to go to Accounts and Settings. And then I'm going to come over here, and I'm just waiting for it to load. There we go. I'm going to click on Sales. And here is the shipping. What I'm going to do, and what you want to do, is make sure that you toggle it on. So we're going to turn this on, and I'm going to save. Okay, and I'm going to push done. And to talk about this, I just want to bring up an invoice to kind of demonstrate. Because if the rates in QuickBooks are going to be actually powered by the address information that you provide for your business, as well as your customer. So once more, make sure that address information is as complete as you can get it. But if you are shipping an item, how the rate is calculated is based on the ship to and ship from addresses here on the invoice. So if there's no ship to address provided, your company address is going to be used to drive the calculation. If you're not shipping an item and it's the sale or the service is actually taking place at an address that isn't your company address, what you can do is you can come over here on the right and you can update the location of sale field here on the invoice to reflect this. And the rates at all of these addresses, no matter which box you enter them into, are going to be reviewed monthly. And so they'll be updated as needed by, again, that team of sales tax experts. They are always busy. And so again, there's also nothing for you to track manually. So you should send them a gift basket. All right, I'm going to close out of here. And now that we have everything set up correctly, calculating sales tax on your invoices should be automatic and easy. But before we go, let's take a quick look, and we're gonna look at two reports that are unique to sales tax. And I'm also gonna show you how you can pay your sales tax. And I'm gonna take a recommendation I got, and I'm switching to an include. Oh, let me sign in real quick. Sorry about that. I had it open. All right, I'm switching to the sales tax. So we're going back to the sales tax center to show you these reports. And the first report I'm gonna run here is up here under reports, and I'm gonna do a tax liability report. And all of the sales tax that you have charged is going to flow to this report. And you can see here that your sales tax is gonna be broken out by state, and you can take the information from this report to file your sales tax returns. All right, so that is the first report. And let me go ahead back because I want to show you the brand new second report. It's the newest sales tax report. It's right up here called the economic nexus. I'm going to go ahead. And once I've clicked, what you see here is the ability to run reports for any state where you have out-of-state sales. And those reports are going to tell you whether you've met a state's dollar or transaction amount economic nexus threshold. And so you'll know whether you need to actually register and start collecting sales tax. And you can see I've done one for a transaction I had for Pennsylvania. You can see, no, I have not met that threshold. And what I'm going to do is since this is a new report, I'm going to drop a link in the chat. You should be able to see this. And it's a resource document about economic nexus. So if you want to know some more information about that, you can see that in the chat. All right, so those are our reports. So I'm going to go back to the sales tax center, because what you always need to do after you've set it up, after you've collected sales tax, what you need to do is you need to actually pay sales tax. So to record a payment, you're going to need to be in the sales tax center. And down here, you can see that, and what you should see is your sales tax return. And you will see multiple returns if you've set up more than one tax agency. And so I'm going to click View Tax Return here. And now what I can do is I can add an adjustment, or I can record a payment. And this adjustment field is going to be for things like credits, discounts, prepayments, rounding errors, and so on. I'm not going to add any of those because I'm just going to record a payment. And so I'm going to click Record Payment. And now what I'm going to do is I'm going to enter, and there's my tax amount. It's filled in for me. I'm going to put today's date. I'm going to make sure I choose the correct bank account. And I can also include a memo here if I need or if I want to. And then I can click Record Payment. And my return is paid. And I'm going to go back to the Sales Tax Center. For users who need to record prepayments, you can also enter partial payments here too. And you can see there's my little paid. Always feels good to have that button come up. All right, you are now all set up to create your first invoice and collect sales tax in QuickBooks Online. And we actually have some time for questions. And I know you've been asking them as we've gone on, but Alana, do you see any questions that I can answer live? And Alana's been helping with questions, as have a few other people.
Yeah, I've got one here for you.
All right.
So can you explain a little more about why we would make our customers use tax categories, especially if everything they sell is taxable?
All right, thanks, Lena. All right, and that's a great question. So tax categories are actually a really important tool to stay compliant, even if you do think that everything is taxable. As an example, you might have a customer that starts doing business in another state where that same item is not taxable. And if you only, when you set up the tax category, you only do it one time, and then you never have to think about it. So you don't have to track that. If the taxability of your customer's goods or their services ever changes to exempt, or maybe it gets, like a reduced rate, if you have your items already mapped to those tax categories, you don't have to worry about it. And QuickBooks will actually update everything for you. It's basically like magic. And magic is just when you don't know what's going on behind the scenes, right? Other questions?
Sure. Here's one. My state has quarterly rate changes that affect my business. How often are these sales tax rates updated?
All right, and these are actually updated every month. So what Intuit does is track every state's website, and they actually also have direct connections with the states. So they'll learn about rate changes before they're even effective. That way they can actually include them on the day you need them. So they'll know about them in advance. Sorry, we could do a couple more.
Sure. Got another one here. I sell clothes, and my state has a sales tax holiday every summer. Is that something that automated sales tax can help with?
Okay, so close and a sales tax holiday. Yes, so there actually is a tax category for that. And as long as you have your products and services mapped correctly, then that automated sales tax engine will actually apply the sales tax holiday exemptions for you, and also any thresholds for that exact date. So the exact date of those tax exemption holidays. And maybe one more.
Yeah, sure. I just started my business and I'm trying to figure out how sales tax works. Once I collect the tax in QBO, who do I pay it to?
Okay. So if you collected the sales tax in QuickBooks, which it sounds like you did, you should actually pay it all to the tax agency where you registered to collect the tax. And this is generally going to be the state, but it could be those locals too, if you remember when we talked about that earlier. And that would be the Golden, Colorado. Again, shout out. I've never been to Golden, Colorado, but I feel like I should go there. So if you're in one of those home rule states, then you would also have to send it to them. Okay, you should pay it to them. But in most cases, it's going to be the state.